Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Jeff Kilburg, CEO of KKM Financial, for our final hit together in 2020. Jeff, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Great to be here. And I think we will collectively agree that we're ready for 2020 to be in the rearview mirror.
That's for sure. And what a year it has been in many ways. Of course, one of the standouts has been market performance, particularly in the work from anywhere stocks. I would not have expected this type of move during the March lows. It's crazy considering the millions of Americans out of work. With the exception of housing, data has finally caught up with the reality of the situation. And they're still continuing to buy stocks, Jeff. It's a lot to wrap your head around.
It's remarkable. And you talk about the dislocation of the real economy here in Chicago. There certainly is a dislocation between the real economy and the stock market. We saw the S&P 500 hit new all-time highs recently above 3,700. And what's interesting is the rotation you talked about. We are seeing a rotation. Certainly those COVID-19 stocks, if we talk about Zoom, we talk about Peloton, you are seeing people take profits. But some of the names, some of the laggards, if you will, Jill, the industrials, we're seeing a lot of different industrials and consumer cyclicals. Look at a name like International Paper or even Waste Management. Not a lot of sizzle in those names. And now all of a sudden you're seeing a lot of attention. So it's interesting to see as people reposition for 2021, they are not walking away by any means from technology, but they are considering owning some of these industrial names as we see a lot of moving parts going to the end of the year for 2020.
It just seems to me that a lot of this is being pulled forward. It's amazing. We got the vaccination out there quickly in remarkable speed, but it's going to take time for it to get through the population. It's going to take time logistically just to even get it to us. I mean, we're looking at another quarter of two of still having, a restricted economy. And it just seems like some of this has been accelerated.
Well, I don't disagree with the timeline, but I think the acceleration point you hit on is really important. As we see Pfizer, as we see Moderna, those are just two of the 28 different names. There's a global sense of urgency. We talked a lot here, on Trade Talks about this global sense of urgency to find this vaccine and now distribute it. So I think the acceleration is going to be interesting. We're also looking at the stimulus package while we're hoping to get the stimulus package out of dysfunction from DC. But lastly, one thing we don't talk enough about, Jill, it's the $5 trillion sitting in money market funds, sitting in cash. It's also the $17 trillion sitting in negative yielding instruments. Look at the German bund. So I think the Fed Chairman Powell, the Fed's message they continue to articulate and tell the marketplace is that we are in a risk-on mode. So if they can move that $5 trillion of cash, at least a component of it, into the marketplace, that surpasses any type of second additional stimulus package. So I think you have to be considered that there is going to be allocations, markets move higher. I am quite optimistic and bullish for 2021, despite the dislocation, which we all understand.
Right, and we're also starting to hear conversation of inflation coming back into the marketplace as well.
It's a wild, wild month here, December 2020. Look at Bitcoin surging. You're seeing the U.S. dollar nearing 5-year lows, and inflation. I know the Fed loves to talk about inflation. I think inflation will come, but we don't see inflation on the horizon anytime soon. I think the Fed is really trying to be prudent. They've talked about where they see rates. I personally see the 10-year note staying somewhat subdued and tethered to 1%, because at the end of the day, I know the Fed can only control the overnight rate, but they do own 1/3 of the 10-year issuance out there. So I think be very considerate that these rates need to stay lower. They moved the target inflation, the typical goalpost that they utilize to measure inflation, and they did move them. So I think that puts us out there like 2023. So it's a risk-on atmosphere. If you agree or disagree, Jill, you have to be allocated moving into 2021.
Of course, and it feels like 2021 is going to be more of a transition year than anything else, almost status quo, if you will. And then going into 2022, when we should be back to some sort of normal, it seems like that's when you kind of reset there.
Well, I think the family offices and the financial advisors we work with, they're getting excited because for the first time in a long time, we're seeing the need for those advisors to be different, to differentiate in their strategies, their exposure, more of an active and dynamic exposure versus the passive indices that have worked for the last 10 years. So this is where it's not going to be a stock picker's market, but it's also going to be exposed to the proper sector. So there's a lot to digest, but I think there's a ton of opportunity. I know the markets are at very lofty levels. I know everything has been bought ever since the U.S. dollar has been debased. But at the end of the day, there's opportunity. Look at commodities, look at U.S. equities, look at emerging. I think there's a lot of money from the liquidity perspective still needs to be put to work.
Great point, Jeff. Great to see you as always. Happy holidays. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.